Hey y'all, this Big Pimpin' 504 coming back at you. Yo, I got some very wonderful news that I want to share with you. First of all, the NFT is very powerful. This NFT covers, well, the PMA contained within the NFT covers the U.S. real estate market from 2023 to 2025. Now, we completed this PMA June 19th, 2023. The dates are very important. I'm going to show you why. The dates are important because this is how you know the power of our PMAs. We tell you what's going to happen within a particular sector or within a particular market. We tell you what's going to happen. And then we come back later with reports from Bloomberg, Financial Times, Seeking Alpha, Reuters, verifying what we stated in the PMA. Now, this particular article in Bloomberg, which verified the PMA within inside the NFT, which is the reason you need to get this. You need to get this NFT. There's so much value within an NFT. I'm telling you. It is entitled, Banks with Heavy Commercial Property Exposure See Bonds Get Hit. Now, within the PMA, we state that due to the increasing rise of interest rates, as well as the increasing value of the US dollar due to deflationary monetary policy by the Federal Reserve, is making it difficult for those who are highly leveraged to hold on to assets. We said this in the report. Now, in this report, which was written, by the way, by Alison Nicole Smith, and it was published on March 5th, 2024. This is why dates are important. This is why you can't mess with the PIMP report. I mean, it's in the name. Proven insights on market predictability. This is what we do. This is what we prove. Our insights are constantly being proven. And the fact that we can predict the markets is also being proven. This is why you need to get the NFT ASAP. And by the way, the NFT is only increasing in value. It already jumped up like 300% since it first been minted. Now, here's the killer part. We only got a few out there. We're going to mint some more. But for right now, those who can, you need to get it ASAP. Really. You definitely got it ASAP for two reasons. One is a timestamp on it. We predict the market. So we tell you what's going to happen. You want to take advantage of that information before it's too late. Because when everything comes to pass, when everything is settled, it's too late. Could have taken advantage of that knowledge. But at the same time, the value of the NFT itself is consistently increasing. Now, I'm going to tell you like this. And I'm going to a clip that was also inside that Bloomberg report. That clip is entitled The Time Bomb in Empty Office Buildings. In that clip, it goes into detail about how owners of commercial properties are having trouble holding on to their assets and having to sell it at a discount. Now, another little nugget inside the PMA, we also state that, yes, these conditions, meaning the rising interest rates as well as the decreasing value of assets, will create a smorgasbord of assets that's going to get just snatched up. But if you're highly leveraged, you're not going to be able to hold on to those assets. And those who have cash, because cash is king, those who have cash, they'll be able to go ahead and take everything that they want with very little resistance. Now, again, I ain't going through too much detail, but I'm going to give you a little sneak peek inside the PMA. But this shows you the power of the PMA and why you need to get our NFTs. Because we show accuracy, precision in predicting the markets. And we tell you what's going to happen. I mean, look, I'm going to go ahead and just play the clip and you'll see exactly what I'm talking about.
How much do you think you can buy this for? 13 cents. The snag is, it comes with at least $800 million of debt. It's the sort of thing that's happening a lot right now, and that's a big deal. because a global property crisis can rapidly spread to the rest of the economy. Office buildings, hotels, and other commercial real estate projects around the world are going insolvent or being sold at knockdown prices. One investor has warned that the industry could face $1 trillion in losses.
This is the biggest real estate crisis since 2008. A lot of office space around the world is now redundant. There's too much of it. And that's why we're seeing such massive value declines.
There's a building in Manhattan owned by Blackstone that's being marketed at a roughly 50% discount on the loan. Aon Center, the third tallest building in LA, sold in December for a 45% discount compared to what it sold for a decade earlier.
There's been Chinese developers run into trouble, and some of them have been threatened with the loss of their buildings as well. So this is happening around the world and will continue to happen.
So what exactly is going on? At the heart of all of this is how most commercial real estate projects are funded.
So a lot of these buildings are funded largely by debt.
So, in our PMA that's contained inside the NFT, we have under liquidity drainage, rising interest rates and their effects on commercial real estate and residential real estate, we said, and I'm quoting, having liquidity in your war chest will be most advantageous during this time period. Asset values are falling and will continue to fall. This is due to increasing purchasing power of the US dollar. Increasing interest rates make the cost of borrowing more expensive, making it increasingly difficult for a highly leveraged entity to hold on to assets. These two factors will create the conditions for a smorgasbord of assets to be scooped up at a discount for well-positioned, cash-laden opportunists. So, as you can see in this video, there are a lot of highly leveraged entities that are having trouble holding on to their assets. As you also seen, these assets are being sold undervalued or at a discount. So yeah, this is why you need to get the TPR NFT as soon as possible, especially if you're a real estate investor, especially a commercial real estate investor, but residential as well. But I'm gonna continue on with this video so you can see a little deeper into what's going on.
In a game of Monopoly, you can't make money if a property has a mortgage. But in real life, landlords use rental income to pay for debt. If there are no renters and not enough money, then landlords have a problem, and the banks that loan them the money.
The knock-on consequence for the economy is job losses from those banks, less credit available, which means less investment into things like factories, warehouses, growing your business, and then in turn, potentially further job losses because instead of the economy growing, the economy starts slowing.
The roots of the 2008 financial crisis also lay in plunging property values.
A lot of banks were exposed to extremely risky lending for the subprime mortgages tied to residential housing mainly.
When a region goes into a recession,
this time it's more like the savings and loans crisis that hit the US in the 1980s and 1990s, where again, small regional banks or trusts advanced lots of money to real estate. Everything went wrong, loans soured, and in the end they demolished a bunch of the properties. It saved more money than to actually try and find a buyer to buy them.
Some of the solutions to the 2008 crisis actually sowed the seeds of today's problems.
When the world was in financial meltdown, central banks decided that the best thing to do was cut interest rates to almost giving away free money to people. And the aim of that was to stimulate the economy.
It became harder to make money from bonds, so investors looked for other places to invest.
In many cases, what happened is that money went into alternative investments. So a lot of that money went into real estate.
At one point, WeWork was the largest private tenant in New York City, which says a lot. They were bigger than a lot of the major banks. And that just kind of showed the insane growth and capital that flowed into the space. Investors thought offices were such an attractive investment because they were betting on the fact that a lot of companies were growing, would be locked into these long-term leases, and rents would continue to rise for the foreseeable future.
As new developments sprung up, all that investment changed the face of cities around the world. But landlords weren't counting on what came next.
The World Health Organization has declared the coronavirus a global pandemic.
Offices just went completely dead and empty across major cities: New York, London, San Francisco, Toronto. Nobody knew how it would unfold or whether people would come back to the office. So landlords would work out agreements with their lenders called extend and pretend, where the idea is let's just extend the loan as it is and ignore any potential short-term valuations that might have fallen because of the pandemic.
The hope was that offices would be buzzing with employees again before the deals had to be renewed, but that hasn't happened.
US office occupancy rates today are about half of what they were pre-pandemic. And while Asia and Europe are doing better than the US, they're still far below what it was.
Lenders in the US have $1 trillion of commercial real estate loans coming due this year.
If the landlords can't find the money, then it could create massive losses for the banks. We're already starting to see that play out.
New York Community Bank Corp. Stock down 41%.
In early 2024, it started with New York Community Bank, which increased the amount of money it had to put aside to cover potential losses tied to the commercial real estate sector. And shortly after, Aozora Bank in Japan also saw the same thing with its shares plunging because it was putting more money aside to cover losses tied to US commercial real estate, especially offices.
We're going to talk, of course, about Aozora because that was a huge plunge yesterday.
That happened in the Bank of Germany, Canada as well, where insurance firms and pension funds started to put aside more money or write down more losses tied to commercial real estate in the US.
Now, what is the value of the currency? The value of the currency is its purchasing power. That's the value of a currency. So when you take currency out of the market, out of circulation, you have a higher demand for that currency, which creates a higher value of that currency, which makes the purchasing power of that currency stronger, because now it takes less currency to purchase the same product or service. So when you do that as a company, prices are going down, so you're making less revenue. But interest rates are going up. If interest rates are going up and you're using some type of leverage, then your debts are increasing. So you're making less revenue while increasing your debts. That right there is what causes a so-called credit crunch, liquidity crunch, and you're going to have a very much of a financial crisis because of that.
These write-downs in the US are starting to have global impacts, and investors are reacting very aggressively when they see these losses being recognized. Share prices are plunging, bond prices are plunging.
Some of this was predictable. Low interest rates can create risks.
People at the Federal Reserve have been worried for at least 8 years about commercial real estate and the threat of a bubble. But in a way, it is the acceptable byproduct of the larger picture, which is to try and cure the economic woes from the financial crisis. Nothing really was done to prevent commercial real estate prices soaring.
It's going to put a lot of stress on the owners of these properties. The banking agencies are very focused in helping the banks.
What will really allow more owners and lenders to skate through this crisis is if interest rates start to come down more to a level that is more manageable.
If that doesn't happen, and the economy in the US in particular still seems to be running quite hot, there's no really easy solution. The financial stability system seems quite secure at the moment. One of the reasons for that is lenders demanded larger down payments from borrowers, which means they have more protection.
But things could still go badly wrong. If a few banks have too much of this debt, they could go under. And when banks start going under, a panic could ensue that sparks a wider financial crisis.
Because now it takes less currency to purchase the same product or service. So when you do that as a company, prices are going down, so you're making less revenue. But interest rates are going up. If interest rates are going up and you're using some type of leverage, then your debts are increasing. So you're making less revenue while increasing your debts. That right there is what causes a so-called credit crunch, liquidity crunch, and you're going to have a very much of a financial crisis because of that. Now, I just want to let you know this is why dates are most important. This video that you just seen comes from an article written by Bloomberg on March 5th, 2024 at 9:54 by Allison Nicole Smith. Our PMA, the NFT that I'm talking about right now, was completed on June 19th, 2023, almost a year ahead. This is why you need to get TPR NFTs. We always stay ahead of the curve. And just to add fuel to the fire, I have to mention this because this is crazy. So, with that being said, there's an article written by The Hill, and this is 2 days after this article by Bloomberg was put out, and it's called Powell, quote, "There will be bank failures," end quote, caused by commercial real estate losses, written by Tobias Burns, March 7th, 2024. Now I'm going to read over the article with you and also leave my commentary about it because it's very relevant to what you just seen as well as to our TPR NFT and the power behind the TPR NFT. So let me go ahead and read the article. Federal Reserve Chief Jerome Powell said Thursday he expects to see some banks fail due to their exposure to the commercial real estate sector, which has declined significantly in value following the shift to remote work. Powell said the banks that are in trouble with falling office space and retail assets are not the big banks, which were designated as quote-unquote systemically important. In the aftermath of the 2008 financial crisis, that episode, which resulted in a taxpayer bailout of the financial sector, was also triggered by unsound real estate assets. Rather, the banks at risk of failure now, Powell identified as smaller and medium-sized. This is a problem we'll be working on for years and more, I'm sure. There will be bank failures, he said during a Thursday hearing on the Fed's monetary policy in the Senate Banking Committee. Now, I'm going to stop right here first. So, he specified that it is not the bigger banks this time around. It is the medium-sized to smaller banks. Now, I have mentioned in the past that there are those who are in the know of what's going to happen, and of course there are those who don't know what's going to happen. Now, for the fact that it is the smaller and medium-sized banks who are more invested in commercial real estate than is the bigger banks, that right there is a red flag of there were those that were in the know and there were those who didn't know any better. And it also goes into the program that Dietrich Muhammad said in his past articles about the consolidation of the banking system. Now, with that being said, the exposure to commercial real estate has a lot to do with the fact that we went through a period where we had low interest rates and we had high inflation, where values were going up and it was like free money. So a lot of smaller players were able to get in on commercial real estate at that time period, while the bigger players held back. Because remember, in the beginning, when I first came onto TikTok and stated that we're in a deflationary period, let you know cash will be king during this period. Why? Because the value or the purchasing power of the US dollar is going to increase, meaning that prices are going to fall. And hence we're seeing that now with commercial properties. Their values have fallen, but at the same time, with interest rates rising, their debts are increasing. So those who are bond holders are seeing that there are wider spreads because the value of those bonds may have increased. However, the interest rates on those bonds have also increased, where a lot of bond issuers will have to pay a higher interest to bond holders. Yet, their revenue that they're generating has significantly decreased because the value of goods, services have fallen dramatically due to the deflationary pressure on the US dollar. So I'm going to continue further now with the article. It's not a first order issue for any of the very large banks. It's more smaller and medium-sized banks that have these issues. We're working with them. We're getting through it. I think it's manageable is the word I would use, he said. Powell didn't go into detail about the specific regulatory actions regarding commercial real estate exposure that are now being undertaken by the Fed, which is both the federal currency issuer and one of the primary bank supervising agencies, though he did say he had identified the banks most at risk. We are in dialogue with them. Do you have your arms around this problem? Do you have enough capital? Do you have enough liquidity? Do you have a plan? You're going to take losses here. Are you being truthful with yourself and with your owners? He said. Now, come on, Powell. Come on, Powell. That is cynical as hell. Do you have enough capital? Do you have enough liquidity when you have a monetary policy designed to take away liquidity, to take away capital? I mean, come on. That is cynical as hell. Like, deflationary pressure, it means that liquidity is being drained, which I've shown you in previous videos that there was a drainage of liquidity up into $1 trillion worth, probably more than $1 trillion worth of liquidity now being drained into the economy, okay, being drained from the economy. How is this happening? Where is it going? I explained this many a times. This is due to two tools that the Feds have. The Federal Reserve have two tools, which are, first, for the banking industry, which is being affected, they have the 30-year Treasury bonds. The 30-year Treasury bonds, when they are being sold, that right there is taking money out of circulation. And it can be out of circulation for as long as 30 years. So that right there is draining liquidity. Then you're raising the Fed fund rate, which is the minimal interest rate for banks to borrow from the Federal Reserve. So you're raising interest rates, which means that now it's more expensive to even borrow from the Fed. So now debts have increased. So you're the one draining the liquidity with your monetary policy through that means, as well as raising interest rates through those means. So how cynical it is to ask the banks, the smaller and medium-sized banks, do you have liquidity? Do you have capital? Are you fucking kidding me? That is crazy. Now, it also says in the article, and I went over it, I'm going to say it one more time. It says that the Fed, which is both the federal currency issuer and one of the primary bank supervising agencies. They'll let you know that right there in of itself is a conflict of interest. You're supervising the banks, telling them what to do, and you're the issuer of currency. You're the one that creates monetary policy, and yet you're going to ask the medium and smaller banks, do you have a plan? Do you have liquidity? Do you have capital? Are you fucking crazy? But hey, they did it. It happened. Now, keep this in mind. I predicted this shit, and pardon my language, I'm a little passionate, but I predicted this back in 2022 technically, and put it out there in 2023. And again, our NFTs were completed. The PMA for the NFT was completed June 19th, 2023. So we already saw where everything was going way in advance. So those who are real estate investors, you definitely need to get a hold of our NFTs, because not only are we pointing out what's going to happen in the future in terms of markets with accuracy and precision, mind you, but we also give you a way to take advantage of what's happening. And you can't beat that. You'll be in a position to prepare for the future as well as take advantage of what's going to happen in the future. That's the power of the TPR NFT. So let me continue with this article, because I just want to dive in deeper into why becoming an NFT owner is such an advantage, especially when compared to everyone else, because no one has this. Now, it says, we are in dialogue with them. Do you have your arms around the problem? Do you have enough capital? Do you have enough liquidity? Do you have a plan? You're going to take losses here. Like, damn, really? Like, just flat out, you're going to take losses here. Are you being truthful with yourself and with your owners? How? Are you being truthful with the banks? Are you being truthful to yourself and with the owners of these banks, or the owners of the bonds of these banks? Because really right now, the bondholders are really catching hell right now. Commercial real estate investment trusts, known as REITs, have taken a hit over the past few months. Alexandria Real Estate Equities, Boston Properties, Kilroy Realty Corp., and Vernado Realty Trust are all in negative territory since the beginning of the year. Powell described the decline in value of commercial real estate as a result of remote work following the economic shutdowns of the pandemic as a, quote, secular change, end quote, in the economy. In many cities, the downtown office district is very underpopulated. There are empty buildings in many major and minor cities. It also means that all the retail that was there to serve those thousands and thousands of people who work in those buildings, they're under pressure too, he said. While the decline of commercial real estate values could put some banks out of business, Powell expressed confidence that the Fed and financial regulators will be able to contain the fallout and prevent a broader crisis. 34 U.S. banks have failed since 2015, according to the Federal Deposit Insurance Corps, FDIC, which insures deposits at regulated banks. Now, we know that the falling value is due to deflationary pressure. We already covered that. We also covered that in 2015, Yusuf Mohammed stated that they had not one but two tools to bring about deflationary pressure while simultaneously raising interest rates, so that not only will the depository banks be affected, but the shadow banks, who are investment capital-based banks, will also be affected by the second tool. So we understand now that this is a deliberate act by the Federal Reserve to create the conditions that we are currently experiencing. So, with that being said, with the value of commercial properties going down, with the decline of revenue generated from those office buildings, as well as the owners of those buildings who had received those buildings through leverage or through debt, they're suffering because their revenue is not matching up to the debt, which is increasing due to the rising interest rates. That's why it's such a huge spread in the bonds. And that's why bondholders are panicking right now, because the bond issuers are not able to cover their debts. They're not able to pay off their bondholders, and their debts are ever increasing. So, with that being said, this is what we saw coming back in June of 2022, June 1st, 2022. And I went into more detail on January 1st, 2023, when we said that BlackRock verified our PMA. Now, the PMA that's contained inside of the NFT was completed June 19th, 2023. So, again, if you were a real estate investor or commercial real estate investor, you already known ahead of time what conditions were being created to bring about the results that we see today, so that you will be able to prepare yourself by getting access to liquid capital in order to take advantage of the current conditions today. And those who are in the know, they have capital already laid out. In fact, Warren Buffett, he actually had $58 billion in cash waiting just for this moment that we're experiencing right now. So, with that being said, it's extremely important not only to follow me on YouTube and follow me on TikTok and also become a patron of mine, but it's also important for you to get this NFT ASAP, because not only do you have a digital asset that increased in value already by 300% since November of last year, but the PMA that's contained within it will not only prepare you for what's going to happen, but also show you how you can take advantage of what's happening. So you always have the power of time, which really you can't get in most other places. Not only that, you have a digital asset that you can actually sell and trade. You can actually trade it and make another profit off of that. So it's nothing but wins here. And in the NFT, there's a QR code which you can scan. If you definitely are a real estate investor, you will actually get access to the inventory that I have access to, that I'm privy to. So you actually be able to take advantage in real time the conditions that are going on within the commercial real estate market. Not only by preparing yourself, putting yourself in position to take advantage of, but actually having properties that you can actually purchase in order to take advantage of the current condition that's going on. So we bring nothing but value to you. It's a win-win all the way around. Actually, a win-win-win all the way around. So yeah, so that's all I got for you. Just want to show you that this PMA, this NFT, unlike any other NFT, this is the first PMA that's structured as an NFT ever in history. So the value is just crazy right now. And I want you to take advantage of it. So with that being said, keep it pimping.